Hey, good afternoon, everybody. Tom Stewart here. I am with Liz Trotter and an army of other people today. We've got Caleb Pierce, we got Robin Stevenson, we have Pam Clyde, and we have Patricia Myers. And we're going to be talking about pay types today as part of our accounting and finance series for the month of November for Smart Business Moves. Boy, I'm exhausted.
That was a lot, Tom.
Yeah, so we're kind of done for the day here. I'll just kick back and let you guys go from here. No, we haven't done this in a while, have we?
No, we haven't. Hey, Denise.
Do we have somebody else out there? I don't think we do. Oh, Denise. Okay, she's in. Denise, how come you're not here?
Linda too.
Hey, Linda.
They both have questions, Tom, but the people here today on our panel also have questions. And so I thought we could do kind of a hybrid of questions and just answers between everybody who's doing what, who's tried what's worked, what really hasn't worked, and for what reasons, and that kind of stuff.
Yeah, that's awesome. I mean, pay is a big deal. It's always been a big deal. I think it's even a bigger deal now because we're paying more for. Who'd have thought we'd be paying this much for labor 2 years ago, right?
Nobody.
So we have more reason than ever to try to get that right. Do we want to talk about what we were doing last week, Annie? Anything special happened last week? We were rocking it out in Vegas, weren't we?
I think that was a week ago. More than
we have Tara. Hey, Tara, how are you?
Hi, good. How are you?
Doing great. We're doing great. We were just talking about the vacation we took last week out in Las Vegas.
Sounds like quite a vacation.
Yeah.
Except Tom. I don't think
Liz and Tom were quite the speakers as well.
Oh,
I believe that.
I think I failed the game though.
He's gonna try to outdo you, Liz.
Yeah, he would get his turkey hat.
Fantastic hat for the holidays, and I know he was going to wear it last week. I'm sure on Wednesday, but I wasn't on.
I don't have one to put on. How about you guys?
Was it Wednesday? Did we do something last week Wednesday, or was it Monday?
Oh my gosh.
I told you he was going to.
Wow,
Tom Turkey.
Wow.
Denise hooked me up for a lot of holidays here, so I'm good to go.
Well, she sent me this one too, which I thought was really amazing, but man, you're out there.
Oh, I should have.
It's going to be hard to talk about this with Tom wearing his turkey hat.
So,
didn't you guys have a show last week with Dan?
we were in Las Vegas, and no, we didn't. We did some live streams, but we didn't do a formal hour session of Smart Business Moves.
Oh, I didn't realize you were.
Wait a minute. Am I always confused? Yeah, we were back last week. I stand corrected. I guess we did. We did it on Monday. I forget.
Okay.
I forget.
I thought you guys did one on Monday because that was my first day back, and I was not up for anything.
Yeah,
we did. Dan, you're right. Dan Platt and I, we kind of geeked out on accounting stuff last Monday.
Yeah. What? Well, how'd that go?
I had fun.
Yeah. You always have fun talking about finances, Tom.
That's right. We'll talk numbers all day long.
Well, as far as today goes, we're going to talk about pay plans. I'm interested that we have Caleb and Tara because I like to hear both perspectives from them. You know, they definitely come at situations from a different perspective. And I'm guessing that's part of what makes things work with you guys. Yeah. You guys always have both sides of a view. Oh, there's Linda.
So, where do we want to start with this? Do we want to just talk generally about where do you want to? Hey, Linda, how are you?
I'm good.
Linda's my foundations buddy. She basically got me through Foundations 11.
I loved it.
Yeah, I think
It was
she got
fun.
most of us through Foundations 11.
For sure.
Hey, Kelly. Ah. We have our Thanksgiving attire on.
So, is there one particular, when we're talking about paid types, we're talking about hourly or some type of split hourly type pay, or maybe commission, or being paid on allowed hours? I guess there's variations and tweaks on all of those. Is there one best pay type to use, or are there pros and cons to all of them?
Yeah, I think there's pros and cons to all of them. I've tried pretty much everything over my 14 years, honestly, Tom. And first I tried hourly, and there was no incentive for people to really move through that home in an efficient manner, really, right? If I didn't have 8 hours of work for them, it was to their benefit to drag out their time. So then I tried at least limiting their time and doing basically job ticket hours, which was helpful. And then I heard of another pay type that was based on the hours that they work in a week, or that I was able to assign them. And I tried that for a while as well. But what I found was, if I didn't have enough work for them that week, it wasn't their fault, right? That they couldn't earn my top tier pay. So I felt bad about that. And that there wasn't a good way to monitor that. So now what I'm doing is I do have tiered pay, but it's based on quality. And it's by far the best for me and my company at this point. We do have job ticket hour limits. So it's a 3-hour house, 4-hour house, whatever. But the amount that they get paid to do each house totally depends on their quality that week. And it's working very well for us.
Okay. So it's kind of what you call job ticket hour, or we call allowed hours pay. But the amount of pay per allowed hour that is awarded is contingent upon quality. Is that the quality score of that one job, or is it an average over?
It's over the week. So every week they have the opportunity to earn a different pay grade. But I'll tell you, most people out of training get to our middle pay grade pretty quickly, and then get to the top tier pay after that. Usually about a month or two in, they can get to top tier. Most people stay there, but sometimes we'll have somebody who will drop down and start to get some complaints, and they'll drop down a tier in pay. But of course, our goal is to work with them and help them get back up to the top tier.
Okay.
So I have a question, Pam.
Yeah.
Because I love that idea, but what about when we talked about earlier today, like when you have, like right now I'm hourly, but if I send someone to do a job that I calculated for 6 hours, but they're done in 4 hours, so obviously my timing isn't correct. So my profit is larger. Do you have anything that keeps that from happening? Or are you pretty good about, like, have you gotten to that point where your hours, like, what it takes for a job to get done?
Yeah, we pretty much know. I have a whole chart on that. There are a few variations. And of course, for the deeper cleans, that's harder to monitor, because the first time clean, you don't know what you're walking into necessarily. So I'm a little bit more lenient there. But as far as the, biweekly, weekly, and monthly amounts of time per square footage range, barring some sort of extraordinary circumstance, we've pretty much nailed that, and we know.
Pam, do you pay then when you're talking about job ticket hour? Is it like $1 per job ticket hour? Is it?
Yes,
Do
it is.
you mind sharing your pay?
Yeah, absolutely. So ours is for poor quality, it's 18 per job ticket hour. For good quality, it is 19 per job ticket hour, and for excellent quality, it is $20 per job ticket hour.
So that's
How do you measure the quality?
A little bit of both. Of course, we count on customer feedback. We do some spot checks. If we're not getting any customer feedback, then we definitely send a QC person out to start spot checking some homes, because that can be an indicator. Or we'll pick up the phone and try to find out, are they just not wanting to get the cleaner in trouble by not reporting anything? Because if you go a whole week, in my company anyway, if you go a whole week and we're not getting any customer feedback, that's a red flag.
Yeah,
Sure.
definitely. All right. That's great. That's great to get us started, Pam. I'm sure we're going to have more questions about that too. Robin, you want to share how you pay?
Yeah, we use a split hourly format where we pay a higher hourly cleaning rate while the technicians are in the home. But when they are driving from the office to the first client's home and in between homes and back to the office, we pay it basically minimum wage. And the idea there is to encourage them to be in homes longer, being efficient and thorough in the house rather than driving around in cars trying to, I wouldn't say pad their paycheck, but it just encourages them, I think, to be more thorough and do a better clean in someone's home rather than driving around in a car.
What is your minimum wage, Robin?
The minimum wage is $7.25, so it's certainly a significant for them to stay in a home cleaning versus jumping in a car. When they're in a car, the windshield time is strictly an expense to the company, and it's not really benefiting them greatly, but they're still getting paid while they're going from job to job.
Okay.
I have a lot of questions about that too. Let's keep going on with everybody and see what everybody's pays are. One question real quick, Robin. Is that the pay you've always used, or have you switched?
Way back in the beginning, about 6 years ago, we were at a commission-based structure. But we changed that and went to hourly because it was easier to track in the market and for the cleaners. So we went to that. But now I'm considering looking at commission again, or some type of job ticket hour with some focus on some quality, but maybe more so on volume. So if they're in the house, they're efficient, they're very productive, they can get in a home in and out quickly, but maintain the quality, then I want to be able to pay them more if they're being efficient with their time. So I want to look at other options so I can pay the technicians more, but also improve profitability as well.
Cool. Thank you. That's helpful. Also, Tom, can you give just a quick definition of efficiency and productivity, that the way we define them here on the show, so everybody knows?
Efficiency is how much of the workday is actually spent cleaning a home, generating revenue. An example would be if I was cleaning 2 homes in a day and each home took me 3 hours rather, that would be 6 hours of cleaning time. And if I were on the clock 8 hours, it would be 6 divided by 8, or 75%. Whereas productivity is how quickly am I cleaning the home relative to the allowed hours. So if I was doing a 3-hour home and it took me 4 hours to clean it, then my productivity would be 75%, because it took me an hour longer than what it was supposed to. So you want to see productivity at or greater than 100%, and efficiency as close to 100% as possible.
So for with Robin's example, you'd want that high efficiency, that the paying that low drive time rate starts with that efficiency to get into that next job where they're starting money again.
The thing that you have to manage with that split hourly approach is the productivity, though, because I'm making more money per hour while I'm in the home. And if I'm not managing that, my cleaning professionals might not move as quickly as they should, because financially they have no incentive to clean the home any faster. They just have incentive to minimize the drive time.
Yeah. Okay, awesome. Thanks, Tom. Caleb, can you kind of run us through what you and Tara do, either what you do now or what you've done in the past? Or
Yeah. So for a while there, we were doing pay per diem, which means that we would track. The problem with this one is that when you track it, you have to report it. It was a lot to do. But track who did like the kitchen, who did the bathrooms, so that way, percentage-wise on the homes, we could say, okay, Sally's going quicker than Jill or whatever. And, each person be getting a different pay per hour based upon their productivity. That was the pro in it. So that way, if someone went slower, it didn't bother the other person because they went slower. About a year and a half ago, we did switch away from that style and we went to straight hourly. Just because we were at a transition point in the company and we were able to do that in an effective mannerism. I think, there's internal debate that as we go, so if we ever went solo, about going back to an hourly rate rather than tracking who did the bathroom, who did the kitchen. Solo means, that this person did the entire home. And so it's good having these different conversations right now about kind of like the pay for better quality. And, because we want to reward people for going efficiently and having great quality. And that's really the biggest thing that's the biggest thing we're about, is rewarding efficiency and great quality. And whatever system kind of works out for that to be, it sounds awesome. Our drive time is the same hourly rate as the clean time. Every now and then, I think once a week, we're going through their time logs. With Maid Central, it reports it very easily. When is the drive time versus how much time is spent in the homes. So we can look through and say, it took them an hour to get between those two homes, but it was a 15-minute drive. Obviously they took a 45-minute break. Or was there an accident?
Something, right? Definitely a conversation that needs to be had, though.
Correct.
Okay.
So,
Tara, do you have anything you want to add to that?
Just
Or straighten out a correct. I'm just
so I'm going to move this. Just quickly explaining what he was talking about. What we used to do was we would have, say we wanted to pay out like 34% of the home, we would break it up into job per task, pretty much, which worked out great, but it's a lot to track, and I don't feel like doing that anymore. With the hourly, I like it because, once again, it's not as much to track, but I feel like you have to watch things like the time in between the homes and things that we maybe don't want to have to deal with. But I don't know how to go about doing regular commission when there's a team. That's the main question here, is how do you work that out when you have quicker people and slower people? That's all.
Okay, it's a good question. We're going to go around and we'll get everybody's questions in just a couple of minutes too. Don't forget that one, Tara. I know that's a question that a lot of people have, so we want to make sure we get that one good. Linda, how about you?
I currently pay commission. When I bought the business 16 years ago, the existing owner was paying by the hour. So for 3 months, I did by the hour. And I just thought I was throwing money out the window. It just seemed like they were taking a very long time to clean homes. And when I went to commission, I realized 4-hour houses were now 2-hour houses. And so I kind of like that. With trainees, their first 5 days of training, they earn an hourly wage. But then after they're out of the 5 days, they go into their 30-day training program. So they get a certain percent. And then when they're done with that, their percent goes up. And then if they become a supervisor, their percent goes up. So there's opportunities to keep going up until you get field supervisor. We were running teams of 2. Now we're running, because of COVID, we are running a lot of solo work, and they make 42%. If it was a team of 2, they would split that 42%. And a team of 2 consists of a team supervisor and a partner. Supervisor always makes more than the partner. They're making sure everything is done properly. They walk around, clean for show, making sure everything's done. We haven't left equipment behind. If there's communication with the client, they're the ones who do that. And then if there's a problem in the house, I go straight to them first. And they work with me to fix that kind of problem. If for some reason, it doesn't happen often, but if we have to do a redo cleaning, they don't earn anything. So that's an incentive for them to do the job right the first time, so they don't have to go back and redo for nothing. So the percent covers them from the minute they sign in till the minute they sign out at the end of the day. They come to the office in the morning and in the afternoon. They earn monthly bonuses based on quality and attendance. And that's pretty much it in a nutshell. And depending on their position, they earn other little benefits like Costco membership or AAA membership. So there's other perks besides pay.
Okay. I know a lot of people are going to have a lot of questions for that, for Linda. So I hope you guys are making notes of the different questions you want to ask of everybody. But before we move on to Trisha, I just want to point out for anybody that's listening to this later, when Linda said that she doesn't pay them for redos, she didn't mean that they don't get paid for that time that they're cleaning and doing that redoing that house. What she meant is no additional money goes to them, but she guarantees does make sure that they're still making at least minimum wage for the times that they're working. So
and they make way more than minimum wage. Minimum wage here is like $9.50 an hour.
So yeah, it's important. That's a good point. That it's important to account for those hours and make sure that those hours are included in the number of hours worked for that week, and to do the calculation to make sure that the gross pay for the week divided by those hours at least meets the minimum wage calculation.
Yeah. I just want to make sure, in case I know that a lot of people will see this later. So if there's someone new to business, and
that's true.
We hear Linda say that on commission or percentage that you don't have to pay people for redos. That's not correct.
And once again, it's very rare that we have a redo because they know the policy.
Sure.
There's always going to be redos now and again. That's the nature of the beast.
Yeah.
But we're just making sure how we do it. Okay. Go ahead, Trisha.
So we pay hourly, and then I pay $5 for. So I pay the same wage, whether they're driving or cleaning. And then I pay $5 per location they go to. And then I had intended to implement like a quality and an attendance bonus monthly, but because I considered switching to job ticket, I haven't done that. So I wanted to like completely decide what I was going to do and go with. So that's, sorry, Mia was walking in. So
No worries.
Perfectly okay. It happens to all of us.
I know she has to come in and hang out with me. So
You've been on the show enough to know that we either have pets or babies or somebody. Right?
Yep.
Trisha, can you? I'm not sure I understand about the $5. Is that additional?
So
money?
instead of doing mileage, I pay $5 per location. So like it kind of evens out. I try to think it evens out. So like I have a huge service area. So if they're driving, whether they're driving 5 minutes away from the next location or 30 minutes to the next location, they only get $5 per location.
So they drive their own vehicle, correct?
Yes.
Okay.
Mhm.
Okay. So that $5 is like how you account for like mileage.
Yes, because I didn't want to keep track of mileage. And I really would like to, like, I don't know if anybody does this, but I would like to go away from the whole mileage and keeping track and even paying $5 a location if I could change the way we pay and they would get a higher pay to include that. So I didn't have to track that either. Because currently Laura is like counting them when she runs the payroll.
Counting the houses.
Yeah, so like when payroll comes up on Customer Factor, and I don't know if this is since we're switching to Made Central, and we don't have a lot of employees, right? So that works right now. But so when it comes up, it'll just give her a list of what those hours include. It'll show which customers there are. And so she can track it that way very easily. Like she can easily see if it's 5 or 8. But I don't know how that will work when we go to Made Central, like if that will be possible, 1. And 2, what happens when we grow larger? Like, I don't know that that would work very well if I had 15 cleaners.
Or 50.
Or 50.
Yeah.
Could be 50. I'll take 50. I'll take 50.
Hopefully.
Yeah. So I just think that that's going to be more of a headache going forward.
One of the things that as we move forward as an industry, I think payroll really needs to be kind of a byproduct of the normal workflow rather than a major activity that you're spending hours and hours doing. I mean, with the technology that's out there today, it's 2021 for goodness sakes. You know, the idea of building spreadsheets and counting stuff and going through all of the work that I know in years past that some of us have done to implement payroll, especially incentive pay, such as, you know, commission or allowed hours pay. The tools are out there now where really a click of a button here and there should get you to where you want to go without creating a job for somebody to do all of that. And it's really easy to just do a mileage reimbursement based on the number of miles driven over the week, or you can just give somebody a higher, you know, wage regardless of what your compensation is, and explain that, you know, this is in part to account for, you know, you driving your own car. I mean, there's several different ways you can approach it. Not all states kind of treat, you know, driving and the, you know, reimbursement for your vehicle the same way. So it's always a good idea to talk to, you know, a labor attorney in your particular state to make sure that, you know, what you're doing in that regard is correct. Reimbursing mileage, though, is something that's generally accepted as part of the federal regulation. And when you reimburse mileage to the maximum extent you're allowed to, and I forget what that is, I think it actually varies from various parts of the country to the other. They've gotten that specific now that if there's a different, well, no, those for per diem reimbursement for hotels and so forth. So it's probably the same number across the country. But if you reimburse for mileage, you don't have to pay all the employer payroll taxes on that, nor do your employees have to pay tax on that either. It's treated as a reimbursement rather than income. So there is some tax advantage to actually breaking that out and saying, this is the money that we're giving you as reimbursement for you driving your automobile.
Would be kind of cool if I know, like on customer factor, which we're going away from, because they do GPS, if that could just be automated, right? Like it takes the GPS and says this is how many miles they drove. That would be like a dream come true.
Yeah. Or, the way that we do it is we let Google tell us how many miles they drove that day.
Yeah.
And that's what we reimburse on.
Yeah.
Tricia, my current software does the routing and tells the exact number of miles. So I pay 25 cents a mile to the driver because they use their own vehicles.
Okay.
Like you, I'm going away from it. I'm going to Made Central. And I don't know Made Central well enough yet to comment on that.
I know, but I am excited.
Yeah.
I'm excited for the reports.
Me too.
Okay, so also for anybody watching this episode later, this is not a Made Central pay episode. It's
No, and I hesitated to bring it up, but I wanted to mention it.
just coincidental that we have so many people talking about that here today. All right.
They changed that for the record. The federal mileage reimbursement rate for this year is 56 cents a mile. So you can reimburse up to that point. And there's a lot of reasons that you might not want to do that, but if you can negotiate a compensation plan where, maybe I'll pay you quarter less an hour, but I'll give you more for mileage or something like that, where it washes out, you do save a little bit in taxes when you're maxing out on the allowed mileage rate.
Hey, Tom, do they need to turn in their mileage in order for it to be reimbursable?
You need to have some mechanism where you're tracking it. I mean, if somebody says, hey, I drove 500 miles this week, that's not good enough. You have to be able to show something where, and it has to be reasonable. That's the other thing, a kind of a reasonability test. If there's a piece of paper that they said that, these are the homes and this is how far we drove, that's fine. If your information systems are tracking that, then you can use that information. But there has to be some record. If you don't have something that you can go back either digitally or on paper and show, this is why I reimbursed 56 cents a mile for, 62 miles that week, then you could get yourself in trouble if you were going through a tax audit.
So, but we can, I guess, I'm just kind of thinking through this. On the $5 a house thing, for example, we could list that just as an extra not reimbursement, but extra pay, whatever we want to call it.
Is it treated as taxable? Is it treated as income?
As long as it's taxed, yeah, it would be treated as income, not reimbursement. Because
if you're paying like the employer portion of taxes on that, and if your employees are paying tax on it like income, then I think you're good.
That's what I've actually switched to, especially after I talked to you and found out that we really should have been tracking all of that in order for that to be reimbursable. And I wasn't asking my cleaners to track that for me. I could go back and track it for them, and I guess I need to do that. But I did shift it from being a reimbursement to just an additional earning.
Yeah, I think mine is just an additional earning because we're not tracking it.
Tom, is there a way for in Made Central for it to be for us to be able to find that number and use it?
We track mileage, so that's kind of a byproduct of people just doing their work.
So if you want to increase your hourly pay, would you go ahead and include the drive, the mileage expense as part of their income?
I prefer to make it a reimbursable expense for tax purposes. You're doing both them and yourself a favor.
Okay.
I'm all about paying all the taxes I'm supposed to, but at the same time, using the rules that are presented to us to, not pay more taxes than we should. And
Right.
it's a legitimate expense reimbursement. And so it's not like they actually increase their net worth by that amount for driving that week, because depreciation on the car, gas, and other stuff, net, it's a wash. So this is a legit reimbursement as opposed to additional income. So it's not fair for your employees to be paying taxes on it. It really isn't fair for you to be paying tax on it either.
I see. Okay.
And Tom, so if I understand this right, since my people have the supplies with them, they leave from their home, go to the first job, go to the second job, and then go back home. The only mileage, if I was going to reimburse mileage, the only mileage that's reimbursable is the amount from job 1 to job 2. Is that correct?
As a rule, that's the way it works, pretty much without exception. I would check that in whatever state you're doing business in, just to make sure you're
Okay.
100% on that. But
Check your.
as a rule, that's true.
They recently changed that in Seattle and in Denver.
Oh,
So
really?
absolutely
Okay.
make sure that you're
Mhm.
checking that.
Okay.
And that's another reason to be checking with your labor attorney from time to time, that whatever is the rule today might not be the rule tomorrow.
True.
Especially going
Okay.
into the new year. We can expect we're going to be seeing a bunch of new things going into the new year.
If you were looking to change your compensation to more pay for performance, what direction would you go? Maybe some of the pros and cons between commission or the job ticket hour.
Anybody want to take that question?
See, I
I'd go
personally don't
towards
like the
job
word-
ticket. Sorry.
Sorry.
You go, Pam.
I personally have trouble, or have had trouble in the past using the word commission. I feel like if my team is going to hear, oh, I'm only getting 40% of the job, they're thinking, well, what happened to the other 60? I did all the work, right? And it's also harder for them to understand that. And then if I'm undercharging for a job or overcharging here or there, it just complicates things in my mind. So that's why I went to the actual dollar per job ticket hour instead of using the term commission.
The word commission does leave for a lot of misunderstanding, because people can kind of go to a place where they think it's a multi-level marketing type thing, and I have to buy inventory and I'm not making any money unless I sell stuff. So calling it commission is really bad branding. We present it as like a productivity bonus program, and we guarantee a minimum hourly wage, which is quite a bit higher than the mandated minimum wage, but do it in a way where if they're making, reasonable numbers, they're making more off of the revenue share than what they would if they were just, working hourly. And we show them the math and say, you're going to make at least, say, $15 an hour. But if you got reasonable productivity, you'll be getting a percentage of revenue share off the revenue generated that will exceed that. And revenue share and productivity bonus is, more positive than commission.
And I really like it, talking about it in terms of your base pay is here, and then you have opportunity to earn this additional pay on top of that, so that it's always opportunity to be earning more money, not less, is a good selling point too.
Yeah,
Is
that sounds good.
Is that based on primarily productivity?
Well, it's basically how they're using their entire day. It would include efficiency as well.
Okay.
At the end of the day, the revenue per hour that one makes for the entire week is their gross revenue times, or divided by rather all the hours that were on the clock. So that drive time and as well as
Meetings, supply work.
meeting time.
So if you guarantee a base pay and plus a percent, if they happen to work overtime, how does that relate? Do you have to guarantee their base pay an hour or 1.5 times?
Not
What?
necessarily their base pay. That's a really wonderful question because there's two tests that the Department of Labor will want you to be able to demonstrate that you can pass. And again, I'm going to couch this that you all need to be checking with labor attorneys in your own markets because different parts of the country do things a little bit different. But as a rule, you take somebody's gross pay for the entire work week and divide it by the total numbers worked for that work week, and that is their hourly pay for that week. And if you're paying some type of incentive pay like uh, job ticket hour or allowed hours or what we don't want to call commission, what we would call productivity bonus, what you would do is take 50% of their hourly rate calculated on what we just described times the number of hours that they worked over 40. So if I worked 45 hours that week and if I had an average hourly pay of $20 an hour, I would get an extra $10 an hour times 5 overtime hours. And if you add that in, that's the same as paying time and a half for the hours that they worked over 40.
So I hope you got there, Linda, that so they would actually be almost always getting more than time and a half
Yeah.
of the big pay. The vast majority of the time.
I think it's safe to say, and in the U.S., if somebody works more than 40 hours, they would get more than their normal calculated pay. And again, it's 2021, and we live in a world that you shouldn't be doing a lot of manual calculations for that. You need to expect to have technology that's doing this for you.
I don't call our pay a commission pay because I don't like that word either. I have been calling it percent pay. I feel more comfortable with that. I feel it kind of changes someone's way of thinking. Because I'm the one that's doing all the work and getting the clients and determining the fee. So they're doing the manual work, and they just get a percent of that. To me is different mindset than commission.
So Tom, I'm going to challenge you over there at Made Central to come up with a new pay type that has a new moniker that's not commission, not percentage, but that encompasses percentage pay, but with a base pay. It's because there is no name for that in our industry currently. And as you can see, we struggle.
Another lexicon assignment.
Yes.
Sorry, I know how much you love that. I'm happy to throw out a couple of options, but I definitely think our industry needs a pay type that is percentage, but paid above base pay. That includes a base pay.
We're just going to have to hire somebody and make them like director of lexiconology or something.
Lexicology, Tom.
Lexicology, okay.
If we just knew someone who loved to read a dictionary.
What is can you explain to me what pay per job ticket hour is? Exactly.
Who does job ticket hour?
Pam does it.
Pam explains
So
a little bit better.
So each home is assigned a job ticket hour limit. So whether that's 3 hours, 3.5 hours, 4 hours, 4.5, whatever it is, based on the square footage of the home, and a couple of other factors, right? And so we assign that, and each cleaner knows how many hours that we've assigned to that job ticket hour, allotted hour, allowed hour, whatever you want to call that. And then they get paid X number of dollars based on their quality. And I know this may, as I'm explaining it, may sound complicated, but in my mind, it's simple to understand. So this is what works for me. Rather than having these bonuses and all these different things, I preferred to have it structured in 3 different quality groups: poor, good, and best. Times the number of job ticket hours for that house, and that's how they get paid.
So
Does that make sense?
I think this is where Tara is stuck. So
Okay.
Tara, normally, let's say you have a job that you charge $150 for. Okay.
Mhm.
How many hours do you think that job should take to clean?
About 2.5.
Okay. So in Pam's pay system, that would be called a 2.5-hour job. And so she would pay them for 2.5 hours of cleaning time.
Yeah.
And if
And then if
took
they go
longer,
over, it's just you make less per hour that way.
Right. The cleaner just
if they
averages
go
less per
under,
hour.
they make more.
Right.
Job ticket hours
Oh,
are
yeah.
the same as allowed hours, is the amount of time that you would expect it would take to clean the job.
Yeah.
If you remember the example we gave earlier, where if I spend 6 hours of my day cleaning a home and 2 hours like driving around in the meetings and so forth, 6 job hours divided by 8 clock hours gives me an efficiency of 75%. If as a like company wide, let's assume that on average my company efficiency is 75%. And if I want to have a target hourly rate of $15 an hour of clock time, so if I work 8 hours in a day, I'll make 8 times 15. What I would do is I'd take that $15 an hour and I'd divide it by my company efficiency factor of 75%. And that would
Okay.
give me $20 an hour. So you would pay $20 per allowed hour, and that would be the same as paying $15 per clock hour.
That makes sense. So what do you do when there's a team in there and say one of them is a quicker, more efficient cleaner and the other slower? Would they be upset that their job is not getting done as quickly, but they're still getting paid that, allowed amount?
Anybody want to take a shot at that?
Yeah, that definitely bothers them. And so that's why both we, from the office standpoint, the trainers, and that team lead that they're partnered with on that particular job, is really, it behooves them to work with that cleaner and help them be more productive per job ticket hour, or per hour that they're in that home. Because what you don't want to hear is, well, I did 70% of the home and she only did 30, right? That seems unfair.
Yes.
And that can create a lot of problems within the company or that team.
Hmm.
So what I'm going to tell you, Tara, is you're going to have that problem no matter how you pay.
That is true.
Even if you pay hourly, the people that feel like they clean more of the houses and the other person cleaned less, they feel like it's not fair. You're going to have that. So ideally you want people who clean to the same speed, quality, etc., working together if you can.
Hmm.
But that actually goes to your question that you were asking earlier, I think, a little bit. You wanted to know if you have teams of 2,
How you do commission or
yeah.
whatever.
Yeah. How do you split the pay, which is a little bit in line with the question that I had for Linda, which is when you said that if you have a percentage like 42%, and then you have a team of 2, but then how do you decide? You said one person will make more and the other person makes less. The team captain or coach or lead or whatever will make more. But how do you know how much each person makes? And I think this kind kind of ties into Tara's question as well for teams.
So you're asking me the question, okay? A person has been promoted to team supervisor, so no matter who she works with or he, they make a set percent, and they are the team supervisor, no matter where they are, whoever works with them. And then the person who works with them is a partner who makes, say, 20%. And if she works with another team supervisor, she continues to make 20%.
So if you have two, so a team supervisor, for example, will make 22% by themselves or in a team. And if they work alone, will they then make 44%?
Yes.
Okay. And then if I have two team supervisors working together, would they each make 22%?
No. Then it drops down to 21% each.
Because neither one of them is supervising the other person.
Right.
Okay. Yeah.
But right now we're going so much to solo, that's becoming less of a concern. I only have one team that's a team of two, because I actually have some clients who want a team of two. And the partner on that team does not want to be a supervisor, and she does not want to work by herself. So it kind of works out. And there's exceptions to all the rules. Like if it's a first time clean, like Pam had said, it's kind of hard to really know what they're walking into. So for first time cleans, I give a range of prices, a low end price and a high end price to the client. I don't charge by the hour, but I also pay the team a total of 50% for a first time clean because of what they're walking into. Move in cleans, move out cleans. I pay 50% for the whole team. So if you're working by yourself, you're making bank. You're working hard.
Definitely feel better about making more money about that, doing that job. Oh, Robin, you had asked a question that I don't think we completely answered about allowed hours versus whatever this percentage / commission pay. Like, what are the kind of the highs and the lows, the good things and the bad things about them? One of the things that we didn't mention is with allowed hours, you're in charge of giving your team members raises. So you are responsible for giving them pay increases. But with the other type of pay, whatever Tom's going to call it over there, is their pay increases are kind of baked in. They get pay increases as you raise rates for your clients, depending on how often you raise the rates. So on the one hand, it's good for paying, and on the other hand, it's also good for paying. I know that one of the things that one of the people I know that uses this well is Chris Willett. He really loves allowed hours. And one of the things that he really loves about allowed hours is that when he raises prices, he's bringing in all that extra money initially and then he decides how he wants to distribute that money.
Yeah. And with allowed hours, when you give somebody a raise, it feels like it's a raise because they really see it. Making, more per hour, more per job hour. On the job type formerly known as commission, you're in alignment with your cleaning professionals on making sure that you're charging the right amount, because if the cleaning professional doesn't feel like that they're being compensated fairly, they're going to come to you and say, you need to charge Mrs. Jones more. Whereas if you're doing job ticket hour or what we call allowed hours pay, they're going to come to you and say that you need to tack more time, more allowed hours to this job, in which case that could drive your payroll to revenue up, which you don't want to do. So there's pros and cons to each. There is no perfect one. It's a matter of figuring out which one best fits your business model and which one best addresses the issues that are most important to you.
One of the things I did too, Tom, was I realized after talking to some of my cleaners that have been with me a while that are a lead, they felt like if they produced excellent quality, but maybe a newbie produced excellent quality, should they both be earning $20 per job ticket hour? And so I looked at that and I ended up giving my leads a little bit more, $1 or $2 more per job ticket hour as a reward for them. So they felt like that was more fair. And that seems to be working well.
Okay.
That's good. Thanks, Pam.
Well, we are pretty much at the top of the hour. We've got another minute or so here. Any, go ahead.
Okay. One of the questions that we get a lot is, how do you train? How do you pay your trainers on whatever your pay scale is? How do you manage the training? Do you guys mind all just going around real quick and talking about how you pay your trainer for the time that they're training?
Yeah, we pay a daily rate of $20 per day to train.
That's what we do as well. They still earn their job ticket hours for the houses, even though they have a helper, they might finish early, but they also get an extra $20 a day for training days.
So are they able to take on more jobs, Pam? Because I'm thinking with yours, they have one person, maybe they're training on 2 houses, but then they could eventually get up to 4 houses in a day. So they could be getting double their pay and then also $20. Is that correct?
For us, we don't give them any more work because we really want them to focus on that training and we don't want her to miss something along the way. So we still keep them at the 2 houses a day for however long the trainee is in training. And that training period for us lasts anywhere from 2 to 3 weeks.
I don't pay
2% for the person who's training or the team who's training. They get an extra 2%. And then I pay the trainee by the hour. So if the team is earning 42%, they would earn 44%.
Okay, that's not that much in the beginning, but then you pile on the work. So at the end of a week or at the end of 2 weeks, however long your training is, they're making more than double their pay. Okay.
Okay.
I currently don't pay extra for training because Rod does all the training. And then the few times that someone has to help someone, I just have it. But I love the $20 a day. I love that. So I'll probably use that. Not to Rod though. We don't pay extra.
Sorry, Ron.
Caleb, Rod's my husband, just so you know. I'm not mistreating anyone over here. I might mistreat
Except
you're
your
mistreating your husband, it doesn't count, right, Tara?
Well, Tom, we actually have another meeting that we have to get to right now, 2 minutes ago. So
we're good for today, but we'll be back Wednesday, 5:00 Eastern. Hey guys, thank you all. This was fun. Appreciate your help.
Really good information, you guys.
Thank you.
Thank you so much.
Thank you guys.
Feel better, Liz.
Thank
Take
you.
care.
Bye.
Right,
It's
bye-bye.
fun.